as always, we've got a great one here for you, and I think they're all great, but in any case, in this one, we're going to be talking about credit. And if you've been following the channel for any length of time, you may notice that I've been talking about credit a lot recently, and that's been intentional on this build up to where we are now, as I have done more or less of a soft launch of the Credit Copilot. So I'm very excited about it because this is my effort. This is my resource that I am putting out to help individuals be able to reach their dreams of home ownership. And so through the Credit Copilot, what I am doing is I am providing access to individuals, people who would like to be able to become homeowners, or anyone who just wants to repair or fix their credit. I'm providing you access to a platform that you can utilize to be able to dispute incorrectly reporting items on your credit, create or generate the dispute letters that you need to have created, verification letters that you might be sending off to the credit bureaus or to creditors or collection companies. The platform is basically utilizing AI to help you generate all of that information, track your finances, help you to get your credit in order so that you can become that person that can now qualify for the mortgage to be able to purchase that home, which is really going to put you on another level in terms of helping you to be able to build wealth, generational wealth for your family, and just create a lot of opportunity for you. So I'm really, really excited about this. But the best thing about this platform, the best thing about the Credit Copilot platform that I'm providing to you is that it is free to you to use. It is nothing that I am attaching a cost to. So with credit repair, if you're not aware, I'll just briefly go over the fact that having credit monitoring is something that is, I will say, essential when you're working on repairing your credit. And the reason is because if you're not monitoring your credit, you have no way of knowing whether or not the things that you're doing are actually working and what's coming off and what's staying on your report, so you know what you need to work on. So having credit monitoring is essential. So through the Credit Copilot, even though that platform will be free for you, I do highly encourage you to actually get credit monitoring, one of the recommended options that align with the software, because that way it can integrate in with the software to really help you in terms of utilizing the AI provided in the software for you to be able to dispute those negative, incorrectly reporting items off your credit. So did want to put that quick plug in there because like I said, I'm hugely excited about it, and I believe this is really going to help a lot of people improve their credit and have access to home ownership, especially as we're entering into this time right now where rates are getting a little bit lower. And I mean, honestly, if you make the excuses now in terms of why you can't purchase a home, you're never going to be able to achieve it. So rather than saying, I can't do this, let's start asking, how can I make this happen? And this is one of the ways if credit is a barrier for you. So with that said, we're going to jump on into tonight talking about what else but credit. So we're going to talk about FICO credit. We're going to talk about credit and how it affects your ability to be able to purchase a home and the impact that it can have on you as well, because you might not be as aware of the big impact that having good credit can actually have on you being able to purchase a home. So with that, we're going to jump straight on into it. Your FICO score, 5 sections that form it: payment history, amounts owed, new credit, length of credit history, and credit mix. So payment history is 35% of your FICO credit score. So that's the biggest piece of it, followed by amounts owed, which is 30%. So payments history is just your ability to make on-time monthly payments for any debts that are showing up on your credit report. That's all that payment history is, and it is the biggest piece of it. So literally just paying your bills on time is going to help you out more than any other thing that you can do in terms of building your credit score. After that is the amounts owed. Amounts owed speaks more to how much debt you have, particularly with credit card debt. So for example, let's say that you have a credit card with a $10,000 limit, but you charge it up to $9,000 or $10,000. Basically, you've maxed out that card. By doing that, you are hurting your credit score, because cards that are charged up that high, close to max or even above the max, now you're getting double hit there, that's hurting your credit score. The ideal place that you want to be is at or below, and ideally below 30% of your credit limit. So using that same $10,000 credit limit, don't charge it above $3,000. And that's really going to help you out in terms of continuing to build your credit. But it'll help you even more if you can keep that credit card charged to 10% of the credit limit. So if you can keep that $10,000 credit card charged to $1,000, that's going to help you out even more. So again, remember, 30% is where you want to keep it. 10% is even better in terms of helping out your credit, but that's what the amounts owed is. And those are the two biggest things. After that, length of credit history, which is how long you've actually had credit. There are some ways that you can actually, I don't want to say manipulate your length of credit history, but there are some tips that you can do in terms of extending your credit history beyond the actual time frame that you've had a credit history. So for example, let's say that someone you know has a credit card that they've had for 10 years and they have a low balance on that card and a great payment history. You can ask to become an authorized user on that credit card. It could be a family member or it could be a friend. And when you ask to become an authorized user, that doesn't mean that they have to give you your own copy of the card, but basically they're adding your name onto the card. So now you benefit from all of that credit history. So that long, great credit payment history for 10 years, you're going to benefit from all of that. So now it shows as you have 10 years of payment history on your credit card and everything. And that's one way that you can increase your credit history beyond the years that you've actually had credit. But that's the length of credit history. New credit is just you opening up new credit accounts. So obviously new credit, when you open up an account, hard pulls are done on your credit, and that's something that does hurt your credit score. But that's only 10% of your total FICO credit score. And then credit mix speaks to the different types of credit that you can have. So you could have credit that is installment debts. Let's say that you have a car payment. That means that when you pay off that car, installment debt means that you can't charge it back up again. So car payment is installment debt. A mortgage is a type of installment debt. These are all debts that once you pay them off, you don't charge them back up again. Revolving debt is debt such as your credit cards. So for example, you can charge money on your credit card, you pay it off, and then you charge it back up again, you pay it off. That's a revolving type of debt. And so that just paints to the different credit mix that you have. So you can have installment debt, you can have revolving debt, you have different types of installment debt as well. For example, a mortgage is treated differently than, say, your student loans or your car payments. So you have different types of installment debt, but you also have revolving debt as well. And that's how that kind of breaks down in terms of forming your FICO credit score, which is the credit score that over 90% of the mortgage industry uses to determine whether or not you can qualify for a mortgage. Moving on from there, we're going to talk about some of the stuff that's killing your credit report. We've mentioned a few things already: late payments, missed payments, collections, charge-offs, and inaccurate information. That last one is going to be key in terms of repairing your credit. And so we're going to talk a little bit about that. But if you want to improve your credit, take this website down. It is the only website authorized by the federal government where you can get at least one free credit report every year. Annualcreditreport.com. Let's say it again, annualcreditreport.com. That is the one website that you need to go to get a free copy of your credit report every year. Now, recently, they've been allowing you to get more than one per year, but you're entitled to at least one every year. And that's the website you want to go to get that free credit report. So first thing you want to do in improving your credit, get your free copy of your credit report, and you want to start reviewing everything to make sure that it is accurate. And the first thing we want to check for is the personal information that's on our credit report. We want to look at our name. Is our name spelled correctly? Is it written correctly? You might notice that there are several different versions of your name that might show up on your credit report. You don't want that. I was actually looking at a credit report today and noticed that an individual had 3 different versions of their name. They had one version where it was first name, last name, another one where it was first name, middle initial, last name, and then another one where it had their first name spelled out, or first name, middle name spelled out completely. And then you want one version of your name showing up on your credit report. Briefly, to explain why, if you get into a situation where you need to dispute inaccurate information off of your credit report, the more inaccurate information that you have on your personal information, the harder it is for you to get those items disputed off. For example, let's say if you've got a couple different versions of your name showing up on your credit report, whatever versions with the inaccurate information that's being reported on your credit report, they can utilize that to help validate that debt and keep it on your credit report. So one of the ways that you can help yourself if you get into a situation needing to dispute inaccurate information on your credit report is by making sure that you have one name showing up on your credit report, and that it's the name that aligns with whatever is on your personal identification, be it a driver's license, social security card, any of those things. So make sure you correct all of your personal information. In addition to your name, you also want to make sure that your address is correct. You might see a whole bunch of addresses that you never lived at. You want to have those removed. You want to make sure that your address history is accurate. You have one address that's the current address that you live at and are authorized to receive mail at. Make sure that's accurate as well. Your employment information, you also want to make sure that's accurate. You also have the option to have your employment information removed from your credit report if you so choose, because some people work jobs that are of a more sensitive nature and they don't want people knowing what it is that they do, and so they request to have their employment information removed from their credit report. That's an option that you have as well. But make sure that it's all correct. Whatever you choose to keep on the credit report, make sure that all of that information is accurate. So moving from there, another way that you can help improve your credit is disputing items. I'm gonna skip down to the negotiating payoff or deletion first, and then we're gonna bump back up to the disputing items. So first, negotiating a payoff for deletion. Let's say that you have a collection and you owe $800 on that collection. If you have $800, you could just pay the collection company. But what I highly recommend doing is reaching out to them first and negotiating a payoff for deletion. Now, if you're fine paying the $800, if that's what you owe, then you can pay the $800, or you can negotiate a lower payoff amount. Maybe you have $600 and you don't have the $800. You can negotiate to pay $600 and have that count to settle the debt. Another thing that you want to negotiate is that when you pay the money, they agree to remove the item from your credit report. So I'm gonna say it again. When you pay the money to the collection agency, you want to get in writing that they agree to remove that item from your credit report. Now, make sure you have it in writing before you send them any money, because there have been individuals that have sent their money in and then it doesn't get removed from the credit report. Now you don't have any written documents to go back to them with or go to the credit bureaus with and say, hey, this was supposed to be removed after I paid this. So you want to make sure that you get it in writing first before you send any money in. So that is what a payoff, a pay for deletion is, basically, is when you pay money to have an item deleted. One last thing about that, when you do a pay for deletion, make sure that you have the money before you start negotiating. Don't negotiate to $600 if you don't actually have $600 to pay them, because you need to put a time limit on this thing. It's not like an indefinite amount of time that you're going to have to pay this thing. You need to have a time limit, ideally less than 2 weeks, or 2 weeks at the most. But you could just say over the next week or within the next 10 days or the next 5 days, I'm going to pay you this money. You agree to accept this as the debt being settled, and you're going to remove this from my credit report. Make sure all of that's in writing before you pay them. And you can actually put that in writing yourself, send the letter off to the collection agency, and then they can sign off on it and send it back to you, or they can put it in writing and send it to you as well. Either way, you want to make sure that all of the details that you want to be in this agreement are in writing before you send any money in. That's what a pay for deletion is. Disputing items, you can dispute negative items on your credit report. And again, right before I get to disputing items, I want to hit on late payments really quick. If you have 1 or 2 late payments, payment history, as we just saw, is the biggest piece of your FICO credit score. So if you got 1 or 2 late payments, then that can be something that can really hurt your credit score. And one of the ways that you can have those late payments removed, if you've had a good payment history for whatever account is showing those 1 or 2 late payments, you can reach out to the creditor and say, hey, I've appreciated the relationship that we've had. I've had a great payment history up until this point where, whatever the situation might be, if you lost your job or if you got into an accident or whatever that kept you from being out of work, or you had an event come up to where, it hit you and hurt you financially, but now you're back on track, and that's why you had this thing. But it's not going to be a habitual thing with you having late payments. It's not going to be an issue. You're back on track now. Then you can reach out to them and ask for what's called a goodwill deletion, whereby you reaching out to them and saying, hey, I had this area where, we've had a great payment history, small area where we had some rough patches. Since then, everything's been great. I am requesting a goodwill deletion of those late payments so that they are no longer negatively affecting my credit score. And the creditors that you have a business relationship with can and do have the ability to be able to remove those late payments. And I've seen a lot of individuals who have been able to successfully get those late payments removed from their credit report, just utilizing that method as well. Now, on to the disputes. If you choose to just go straight to the dispute route, or if after trying these things they don't work, you want to go straight to the dispute route, then that is an option by which you can send a letter. I recommend starting with the credit bureaus. You can send a dispute letter to the credit bureaus, and then from there, the credit bureaus do an investigation to see if the debt or the claim that you're making is valid. Now, what I recommend if you're taking the dispute route is that I recommend that you actually, before you get into disputing an item by saying, this is not my debt, I don't own it, this is fraud, any of that, before you do any of that, just start off with a request for validation of the debt. That means you're just sending a letter to the credit bureaus requesting that they validate the debt. And what that means is that whatever the account is that's listed on your credit report, you're asking them to validate that this is yours and that the debt is accurate. Now, you're sending this to all three credit bureaus because the bureaus don't talk to each other. TransUnion doesn't talk to Equifax. Equifax don't talk to Experian. They don't talk to each other. So you have to send 3 letters off every time you're disputing anything that's going to the credit bureaus. So when you send that in, they all go out to validate the debt, and then they have to get back in contact with you, typically within 30 days. And then when they get back in contact with you, you can request for them to provide you a copy of the report. When you're looking at the report, you want to see if it comes back validated. Now, if it comes back that it wasn't validated, then it's going to get removed from your credit report. But if it comes back as validated, then you want to see what was validated, because what you might notice is that TransUnion validated one amount, Equifax validated a different amount, and Experian validated yet a different amount. And so none of these amounts are adding up. They're not the same, but yet you disputed at the same time, and they all allegedly validated the debt with the same creditor. So how is it that they have 3 different amounts? This means that, hey, at least 2 of these should be coming off, because there's no way that all 3 of these can be accurate because they're all 3 different numbers. At least 2, if not all 3 of these debts should be coming off your credit report. That's one of the reasons why I say start with just a simple validation request, because you might be surprised that the information you get back might not line up, especially since these bureaus don't talk to each other. So start there, and then from there, let the information that you get back determine what your next steps are going to be in terms of where you want to go to from there. But that is my recommendation. If you choose to go the dispute option, is starting with a validation, a request for validating the debt, seeing what you get back and letting that determine the next steps in terms of where you want to go. So those are some ways that you can improve your credit. And now we're going to dig into some fun stuff, talking about the difference that great credit makes on you and your ability to be able to purchase a home, and all of the thousands of dollars that you can save when it comes to purchasing a home. So first, down payment assistance. With having a credit score that's high enough, it gives you the ability to access more than $10,000 in down payment assistance. There are some down payment assistance programs where in the state where I live in Georgia, where the credit score requirement is 640. But if you have a 640, you might be able to access $10,000 or more in down payment assistance. There are some other down payment assistance programs out there that might go down to a 600 or 620, but some that require an even higher credit score. And so just realizing that when you have that higher credit score, it does give you access to some of that down payment assistance that can really help you on the front end with being able to purchase that home. Now, lower interest rate. Just a 1% difference in your interest rate can literally save you thousands of dollars on your monthly mortgage payment. And I'm gonna show you that in just a moment. But we're gonna go to the higher purchase price as well. So a higher credit score can get you a higher purchase price because when you have a higher credit score, it can get you a higher debt to income ratio. That's what DTI is short for, is debt to income ratio. So let's say, for example, if you have a 650 credit score and you're trying to get an FHA loan, your debt to income ratio might only go up to 46%, meaning that 46% of your income can go out towards paying debt in terms of you qualifying for a home. Now, if you have a 720 credit score, we might be able to move that up to 50% or 53% of your income that can now be utilized to purchase a home. So that kind of paints the picture to show you how having a higher credit score means that more of your income can be utilized to purchase a home. And so that's one of the ways that having that higher credit score can really make a difference. So getting on to that 1% difference that we were talking about in terms of the thousands that it can save you. Let's say that you are purchasing a home, and because you've worked on your credit, you've done the great job, you've been through the credit co-pilot program, you now qualify for an interest rate that is 1% lower than what you would have qualified for. So that interest rate that's 1% lower could save you $200 a month. It actually could save you more than $200 a month, depending upon the price of the home that you're purchasing and some other variables as well. So let's say that 1% could save you $200 a month based on the price home that you're purchasing. Over 5 years, that's $12,000. Now I want to pause right there really quick and just say that if all you did was save the $200 a month, that in and of itself would be worth doing the work on your credit, because over that 5 years, that's $12,000. Now, what if you saved that $200 a month literally? And what I mean by that is your mortgage is $200 a month less because you did the good work on working on your credit to get that interest rate down. But what if you literally took that $200 and put it in a bank account and saved it? So over the next 5 years, now you're building up money that you can now utilize 5 years from now to go and purchase an investment property. So in 5 years, you now have been able to purchase 2 homes, not just 1 home. And that's how you start building up the wealth, because with that second home, you're not actually paying the mortgage on it. Your renters are going to be paying the mortgage on that investment property. So just wanted to throw that nugget in there because you have a lot of different options. Now, I'm not going to get into all of them, but just to give you a little sneak peek or a little idea into some of the options that you have. $30,000 worth of purchasing power. That's what we're talking about when we're looking at a $200 a month difference, is that if you could purchase 1 home and you're maxed out at your debt to income ratio, so let's say that you're the most that you can afford in a home, the lender tells you we can go up to a $400,000 home. If you're able to drop your interest rate 1% and that 1% saves you $200 a month, that $200 a month now allows you to be able to purchase a $430,000 home. So now instead of just purchasing a $400,000 home, you can now purchase a $430,000 home. And that's something that really does help you tremendously in terms of being able to possibly get that home that's going to work a little bit better for you and your family, or get that home in that neighborhood that you really like to be in, instead of settling for the one in the place where, you know, maybe it's your second, third, or fourth choice on the list. So again, having that extra $30,000 worth of purchasing power can really help you get something that's going to work a lot better for you. Or maybe this is going to be a property that you're going to live in just for a year or two, and then you're going to house hack, meaning that you're going to rent that property out, move to a different primary residence, and now you've got that low mortgage payment and everything, but it's as a rental now, and now it's drawing in money. But that 30,000 can get you that better property that's going to work better for you as a rental as well. So these are just some options, but overall, it's worth it to work on your credit. This is something that you don't want to neglect. I've seen so many individuals who literally pay thousands and thousands every year more to a mortgage company or more in interest. And I'm a loan officer, and I don't want to see people just giving their money away to the mortgage companies. So I try and help people look for the ways that they can save their own money. And so when I see people who haven't worked on their credit, they may qualify to purchase a home, but it's going to cost them so much more. It might even cost you more in a down payment as well. So again, you want to make sure that you are really doing everything that you need to do to be able to get that credit score higher, so that when it comes time for you to be able to purchase that home, you can have access to all of the assistance that's out there, and you can be able to purchase a home that's going to be best suited for you while saving thousands and thousands of dollars in the process. So who doesn't want that, right? But thank you for taking the time to tune in. That's what I have for you on this live broadcast. Again, we're going to be here every Tuesday, so make sure that you come back, tune in. We're going to be bringing you some more great information and everything. And check out the Credit Co-Pilot as well, because like I said, it's going to be free for you. Your only cost really is going to be the credit monitoring that you'll need to get to make sure that you can monitor your credit as you're working through the the process of repairing or removing inaccurate information from your credit report. But make sure you check that out as well. So if you want more information or more details, you can feel free to reach out to me, connect@incorporealbuild.com. I'll put some information in the description as well, so that you'll have those details. Thank you for taking the time to tune in. I greatly appreciate it. Take care. Be blessed. We'll see you next week.